Good morning, everybody. Welcome to the game plan. This day, one day after the markets were closed in observance of the Christmas holiday. My name, Gareth Soloway, here with VerifiedInvesting.com. All right, so we're going to look at the technicals of the markets, the major indexes. We're going to look at key movers and shakers today. What are the technical trading levels for the day? We're going to take a look at Bitcoin. Bitcoin, again, over the holiday kind of popped up, retesting 100,000, now being rejected and pushing back down to 95,000. What's going to happen right there? What are the charts telling us? And then lastly, we'll go into gold, silver, oil, and natural gas, taking a look at what those things are doing in the near term. Now, as I always do, folks, follow me over to the big board here, and let's take a look at what the markets are doing pre-market. So what we're seeing today is a little bit of a retrace from Tuesday's big rally to the upside. The NASDAQ ended up over 1.3%. The S&P ended up about 1% on the day. Now, one of the things I want to show you here is look at the action on Friday. Now, excuse me, Friday. Tuesday. Tuesday, the markets almost went nonstop to the upside. Now, why is that? Well, if you look at the participation on Christmas Eve, it was essentially 99% retail, right? We'll put an R there for retail, 1% institutional. We'll put an I for that. So that was this action. And it shows you that when you have a holiday session like this, in general, the big players, the big institutions, they're already closed down. In fact, for the next week or so, all the way to New Year's, they're going to be essentially done. Now, they'll participate a little bit more. I mean, they have to have people at the trading desk in case something goes majorly wrong. But my point being is that when you essentially have the cat being away, the cat's away, when the cat's away, the mice will play, that's what you get. You get the bullish sentiment. In fact, I saw a stat recently that talked about how many people were bullish going into 2025. It was actually at an all-time high for the stock market. Also, in terms of how the economy will do in 2025, is at an insane amount. Better than expected, 79% of people are feeling that way. Now, again, I'm a contrarian indicator, right? I look at this and I say, okay, if everyone's feeling that way, that makes me very nervous that any sort of bump in the road could derail this rally. But again, going back to the price action on Tuesday for the short day, you can see up, up, and away. Now, as we get into the day now, we're one day after Christmas, it's mostly retail investors again, but it's not quite as much. There's no doubt there was less institutional money playing ball here on Christmas Eve than today. And you can see the markets are coming down just a little bit because of that. So what I would say today is 90% retail, all right, 90% retail here, and today would be 10% institutional. All right, so again, just gives you a sense of how you see the market reacting when the bias from the retail crowd is so intently bullish and the institutions are really not participating, to when they're just participating at 10% versus their normal, and you can see the markets pulling back just a little bit. Now, don't be surprised if the markets tend to float up throughout the course of the day. That can generally happen, especially as the big players will mostly look to make trades early in the day here, selling into volume. Once that volume lightens up later today, they'll step aside. Now, interesting little chart action here. This is the S&P 500. So we've been following this trend line that stretches back to basically October of 2023. It goes through essentially every top right along here. We kind of got close, and then we had the big rollover. Now, we had this underbelly trend line taking the low from August right here to the low here, going back to November. Now remember, this was your August swoon, and I know it seems like a long time ago, but this is where the markets had a massive sell-off to them, to the point where we had that gap down on a Monday that was honestly scary. It was to the point where you saw people panicking. But what do we know? When there's blood in the streets, essentially that's the term on Wall Street, what are you supposed to do? Are you supposed to sell and panic, or are you supposed to buy? Buy, right? Right there. And look at what the markets did since that gap down. So the point being is, if you take that low connected to the most recent low there, what did we get here? Look at this. We broke down, we went right back up, and we retraced into the scene of the crime. So essentially what you're seeing is the charts are trying to work their magic like they always do, where price here is getting rejected, and we're seeing it down even on a day when the volume should still be very, very light, all right? And again, like I said, I don't necessarily think there's a lot of upside remaining in the year. I think for anything more, it's going to be a more sideways chop, a little downside, a little upside, the retail investor trying to go long into the new year. But once we get into January, I do think you get your next wave of selling to the downside. I still think this wide range candle here, this is a nasty candle on a technical basis that essentially engulfed all of this upside here going back to essentially November. Essentially, it erased the Trump rally, right? Where we had Trump's election here, the markets went up, and then they got erased there. Now it's getting a classic retrace to the scene of the crime, right back to that trend line. And in general, I think sideways chop, and then you get your down move starting maybe second week of January. All right, so let's go on to a couple other key charts here as we get through. Number one, we want to take a look at the NASDAQ, and we can see that, again, you had your bigger parallel channel right here, right? Bigger parallel going back to the COVID lows, to the bull market highs right here, to the bear market lows. We just tagged it right here. It then triggered that big wide range sell-off. Here is your retrace. And again, generally what you see, if you look at 100 or 1,000 of these scenarios, you go back up. As long as you don't close above that red bar high, you look for that move to the downside to come in and the next leg down on the market. Now, stocks that ran incredibly on, Tuesday was Tesla. Tesla, incredible move on Tuesday, just nonstop. Remember, think about who's participating in this market, right? If we're talking about on Tuesday when the big institutions were away, in general, a cult stock is Tesla. Tesla has a cult following. It's been a momentum play. It had a big dump recently, but it got some momentum, and you're seeing that momentum carry on at least into the start of today. Now, I'm curious about, again, the technicals on Tesla look like it's now topped out. Let's see what happens. Do we see selling come in, or can it continue to push up? Looking at the chart, you can see pre-market it is up a little bit, but not much at this point. It is not up much at this stage of the game. Let's watch and see where it goes today. This is actually on my radar for a short with the live day trading room this morning, and I'm going to show you why. So if we go to and I'm removing my after hours and pre-market data here, what I see on this chart is, so number one, I know that it's traded about as high as $470 this morning. What I have right in here, take a look at this. See right through here, these little lows? I drag that across. It's around 474, 473. I would say put it right there, around 473.50. Now, the other thing I do is I say, okay, well, now I have a level, but it's only a level that is medium. We'll call it a medium level. Now, what else can I do? Can I find a Fibonacci retrace? So we take the highest point. This is your all-time high on Tesla. We drag it down to the lowest point, and we want to see what a retrace level is, and look at what we have. The 786 Fibonacci retrace at 473 Pierce aligns almost perfectly with that. So now, as a day trader, right, as a day trader, what do I want to do? I want to say, okay, now I have two levels aligning. We know the stock was extended on Tuesday going into that 1 p.m. close. It's continuing up. If this were to push up, let's say in the first hour of trading into that level on a straight shot up, like I don't want to see big pullbacks here. It has to be continuation of Friday or Tuesday's move. It has to be continuing up, up, up into that level. Then we look to short it. And again, this will be something that I do live with the live day trading room if we get that set up there. I love these type of setups. Multiple factors, extended chart in the near term, quick day trades. Again, as a day trade in Tesla, we look for $5 or so. Boom, boom. Take that money, put it in our pocket, move on to the next trade. Day trading is fantastic. All right. Apple pushed up on Tuesday as well. I'm not buying this, guys. As I mentioned on Tuesday, I did buy puts on Apple. One thing, again, to keep in mind, and again, I think I mentioned that I bought the 255s. I actually bought the 250 strikes, the Decembers on that. But one thing I'll watch here is just in case we push up a little bit more, this 263 level would be very interesting. Now, I bring this 263 to your attention because there's a pivot low, and you get a parallel, right? You get a trend line. You drag that parallel right up here. And why is this level interesting to me, okay? Let's talk a little bit about this. Why would this 263 level right here be interesting? And I'm going to walk over to the big board to make my point here. if we take a look at this, the reason why not only is it the parallel, but also what do we have up here? This is where you would hit $4 trillion valuation. So if you know how the methodology that I teach works, we talk about even numbers. Even numbers, whether it's market cap wise, like the 1 trillion, the 2 trillion, the 3 trillion. In fact, if you remember, NVIDIA went to 3 trillion, pierced 3 trillion, then it got a big pullback during the August swoon to like 2 trillion or under. It was, I think it went from like 130 to 140 all the way back to $90 off of that major 3 trillion break. So considering you have a 4 trillion valuation right around 263 or so, that could be that point where we see that bigger move down. Short term, you'd look for a move back to 236, classic trend line right there. And again, I'll keep you posted on my puts that I have on Apple at this point. All right. So again, just a little interesting update there. Next, let's go to the 10-year yield. Now, the 10-year yield, take a look at this. This is now, I was doing some more research on this, and it now looks like there's a chance we could go back to 5%. Why 5%? Well, you have this upsloping trend line going back to 2021, right? So December 2021, right through here, and it connects through these lows. We came down, we went up, we pulled back, and look, you have this upsloping trend line merging with a double top from 2023 right at 5%. Now, you might say, wow, that's pretty cool, but I want to show you something that's even cooler. I want you guys to understand what I use. So we do what's called a measured move. When you get a big move up and a pullback, and then you start to rally higher, I look for measured moves in the charts. If we take this low and we do a measurement up to here, okay, all right, this is, again, so that distance, and then what I do is I take that, so I can move this around, and I put it to this low. Look at that, guys. Is that not cool? So that would be a measured move, and running over here just to explain this. And again, the point being is as a technical trader, our success depends on how many factors we have, okay? And just let me, before I go back into this chart, let's just go over this. If you have one factor, we'll do 1F, I would say you got a 50-50 chance, right? 50-50. All right, two factors. All right, and by the way, factors can be gap fills, they can be topping tails, they can be trend lines, they can be Fibonacci, they can be measured moves, things like this. But two factors get you to about, I would say about 70%. So 70% success rate, 70-30. If you get three factors on a trade, you want to look at about 80-20, right? Right there. And then four factors, it's really hard to get more than four factors. But four factors maybe gets you to 85-90, 85-90% success rate, right? And that's super rare. That's like, the white whale type scenario there. Generally, this is going to be, for me, generally this is where I'm looking to find most of my trades. Sometimes if I think the risk reward is worth it, I'll look at the 70-30 scenario. But again, the point being is that the more factors you can find in a chart, measured moves, topping tails, trend lines, Fibonacci, moving averages, major moving averages, things like that, that's going to add to your success rate. And as technicians of the charts, that's what we live on, right? We're all about probability. So it's about being the casino, right? So I want to be the casino, but I just don't want to be a casino that wins like 51% of the time and loses 49%. I want to be the casino that has it so far in their odds that basically every day they're just printing money, printing. And again, that's what technical analysis that we teach here at Verified Investing and give out to you guys via these videos is all about. So just going back to this chart here of the 10-year, we have the two converging trend lines here, okay? So we have this area right here, right around 5% with the double top, right, from over here, right? Then we also have what we call the measured move. That low to that high, that distance is replicated from this low, and it goes right to that level as well. Now again, do I play this as a long trade? No. So I wouldn't, for me, you don't chase, right? So for me, it's a cardinal sin to chase. Like you're not going to find me buying, like Michael Saylor, God bless him, but he's buying all his Bitcoin now up at this 100,000 level. His dollar cost average has gone from like 30,000 to 62, 3,000. His long-term view, great. I still think Bitcoin's going higher longer term, but he's raised his dollar cost average now to 62, 63,000. At some point, we're going back there. So for me, it's saying, okay, well, Bitcoin at some point dips down there. I'll just wait to buy until it dips back down. Now, is there a chance I miss the trade? Sure there is. There's always a chance I miss a trade, and I'm okay with that. Because you know what? There's a million trades for me to trade. There's always another trade coming around the corner. And once you become okay with that, then all of a sudden it's very calming. And you say, you know what? I missed that trade. Okay, so I'll just look for the next one. And I might miss that one too, but you know what? There'll be another one right around the corner. Okay, so the point being is I'm not going to chase this, but what I would do is I would look to short that level up there. And that would be a very intriguing level. It's not that far away now. I mean, we're trading at around 4.65, so that's only about 0.35% higher on the 10-year till we get into that level. All right, guys, let's go over our Bitcoin chart as long as we're discussing it here, and Bitcoin behaving just like it should on a technical basis. So if we look at Bitcoin, and I'll go over to the chart, the big board here as well, because I think this is worthy of looking at. But essentially what you have here is, well, first of all, we know the 108 level turned out to be, at least for now, correct, right? And the beauty of it is we shorted here in my service, Smart Money Crypto, and we already banked the profit. It was a great profit. We pull back down into this range. So that's already done. Now, the 108 level I've hypothesized could be a longer-term major top, but we won't know, as I've said in the game plans, until months from now, if not 6 to 12 months out. Now, what you saw here is you have this parallel channel, right? So there was a bigger parallel that gave us the 108. Notice again, look at this right there. See the cross of those two trend lines? We just talked about factors. That's two right there. Now, again, if you looked at the charts, you could have probably come up with a third one as well. But in the very least, that gave you a 70+% chance, maybe upwards of 80, that was going to be a major resistance. That's why I took a trade on that, right? Because the probabilities were high enough. Now, as you have this parallel, right? So you came down to the parallel here, here, and here, and you broke. So what happens is then you go to this next level, and this is like, it's literally like playing hopscotch or, hop, skip, and a jump here. So you come down here, you go back to that level, which is now resistance, you come down again, and then look at what we did on Christmas and Christmas Eve, right back there, and it's now coming down again. So you see how the charts, as you break key levels, the next level becomes major support, but then the level you just broke becomes resistance. And so you can use this. Now you can use this in multiple ways. If we ever break back up here and confirm, it opens the door to moving here and possibly even up to there. Okay, but as long as you stay between these two lines, as a trader, I have to watch. I say, okay, does it break here or does it break here? Because right now it's just chopping. I mean, this is for other people that are different traders than me if they want to trade that. For me, that's a chop shop. Now, it could be putting in a bear flag, right? Here's your flagpole right here. There's your flag, but we don't know yet. We want to see which way it breaks, again, especially with an asset like this. The other thing to point out on this is that I keep on kind of saying that Bitcoin continues to be a risk asset. Right? Now, listen, I'm a big believer it is the future digital gold. It's just not mature enough yet. But one of the things to keep in mind, just look at the price action. This was the shortened day on Tuesday, and the NASDAQ was up 1.3%, and Bitcoin had a good day. Today, the NASDAQ is down. Bitcoin is coming down. So that's just my point, is just continue to understand that while it may, and a lot of us have this vision of, wow, it supplants maybe fiat currencies. I don't necessarily believe that, but I do think it's a store of like a digital gold. The point being is, at least in the near term, it is certainly not there just yet. All right. A couple other things to go over here on the charts as we go through. Gold has been a little bit of a trickier analysis point for me. There's been a kind of a lot of whipsaw on this chart, and if we just take a look here, it still to me has a slight bullish bias, but just being frank with you guys, it's been a little harder to read recently, and I'll tell you why. So you had this big wide range bar, right? And then we had the bear flag. Then the bear flag was negated when we surpassed that. But then you still got a big fall here. You closed below, but you didn't confirm. And now we got a little up move, which could be a micro bull flag. The point being is, once you get into this, oh, well, it did this and then this, the point being is that you have to admit that you don't have a good read on it. And that's okay. There's nothing that says you have to know exactly what every single chart is going to do with a high probability. In fact, a majority of charts will be low probability biases. All right, it's the ones that reach that 70-80% success rate that's where we want to start to say, okay, well, we have a great read on this. We're actually going to put money in that direction, whether it's long or short, so that we can make money because it's such a high percentage. But in terms of gold here, I don't really have a great read, and I'm just going to be honest with you about that. Let's wait until more information comes out with more trading days, which gives us a candle each day, like a new piece of the puzzle, and then we can go from there. All right, quick little turn here to the silver chart as we flip over. And the silver chart here, guys, take a look. It's doing exactly what I drew on last week. It's grinding back to what we would call the scene of the crime breakdown. Remember, big down move, sideways chop, which is the flag pattern, breakdown with confirmation, retrace to the scene of the crime, and then what you would expect is that next rollover to the downside. Oil, you guys know I flipped bullish on oil about a week ago after we started to put in this bull flag here, and sure enough, oil is slowly creeping up. Target 1 around 73, target 2 75, target 3 78. And again, I don't know if it'll get to target 3. For me, I won't short 73. I might start a position at 75 on the short side and then add to it at 78. I'm still unsure about this right up here. I will keep you guys posted. And then lastly, natural gas, guys, real quick here. Nat gas has a whole lot of chop going on here. Remember how I've just said to you guys that I don't have a good trade on this, and it's been about that way for the last 3 weeks since we shorted it right up here. I gave you guys that short. It was a great trade, made money on it with members in smart money stocks and ETFs and smart money commodities and miners. We had a great trade there. But the point being is, if you just look at what this has done from here, up, down, up, down, up, and then down again, right? So the point is that it's a whole lot of chop now. My trades, where have my trades been on this, right? So if we just look at the history of my verified investing trades, we can see that I shorted it right here, right? That was a good level. There was potentially a buy on this retrace, okay? And then there was a short right up here. See how it's extended? It's gone up significantly in a direction, gone up significantly in a direction. That's what we want to see. Once we get in this chop shop, it's really where the institutions pray that you want to trade, because it's a choppy market where they can push your buttons, essentially your emotional buttons, and get you to take a loss here, and then you get back in, and then you take another loss, and they just want to just chop you up, essentially taking money from you. So I strongly encourage all of us to make sure, number one, we went over factors today, 2 to 3 factors at minimum per trade, raises your probability. Learn how to read the charts. It, again, will literally change your financial future, which is what verified investing is all about. If you're part of that retail crowd out there, my goal here is to bring some of these institutional secrets and institutional knowledge and education to you guys so that you guys can actually have an even playing field and essentially make money just like the institutions. Because it always seems like they're the ones banking. It shouldn't be like that. It doesn't have to be like that. And again, verified investing is here to even that playing field. All right, go have a great rest of your day, guys. I'll be back for trading the close later. I'll talk to you soon. Take care.